Okay, testing. I hope that somebody out there can hear me. I want to take a second and welcome everyone to today's webinar. Glad to see that there are a number of people that are dialing in, and I expect that some more people will be trickling in over the next minute or two. But we are going to jump ahead and get started here. And I guess I will say as well that I hope all of you are staying safe and well and somewhat sane in today's crazy world. So the CFA Society of Salt Lake Board is very eager to get together in person one of these days soon. We talk about it semi-regularly about when and how we can get together. We were really excited to see many of you at our golf event a couple of weeks ago. That was fun, and we will certainly keep brainstorming ways that we can get together in kind of a safe way. But until things normalize a bit, we also plan to continue putting on webinars like today's and finding interesting content. So if any of you have any suggestions or thoughts, please reach out to me or anyone else on the board, and we would be happy to consider any suggestions. Today's webinar should be topical and very interesting given the proliferation of digital assets in the world and markets today. So without any further delay, I'm going to hand it over to Josh Finkleman, who is the managing partner of BXE Capital out of Denver, and he will lead today's discussion and moderate the Q&A. And I will say that Josh mentioned earlier that he's making the rounds to a number of CFA societies around the country. So it certainly is a hot topic, and I hope that as you listen, if you have any questions, jot them down or put it in the chat. I believe that capability is enabled as well. And we hope to have a robust conversation today with Josh. So again, without any delay, I'm going to hand it to you, Josh. Thank you.
Great. Thanks, Stephen. I appreciate it. And thank you, the CFA Society of Salt Lake City, for hosting us today. We're going to, I've got a presentation. It's just kind of a broad overview on kind of the digital asset space, and we're seeing the evolution of this technology within the digital asset space. The presentation should be about 30 minutes, and then we will open it up for Q&A thereafter. Hopefully we'll be able to get through, everyone's questions. For those of you who have come in through Zoom, there's a Q&A box, and you can type questions along the presentation that we will address when we get to the Q&A aspect of the presentation. As well, if we run out of time with questions, feel free to email us at ir@bxecapital.com, and we'll certainly, try to address those questions that we didn't get through with the recording. We've got all of you muted during this presentation as well. So again, if you have any questions throughout the presentation, just type them in the Q&A chat box in Zoom. So without further ado, let's dig in. So the overview that we have put together, we'll touch a little bit on BXE Capital and kind of who we are, and then we will delve into what is a blockchain for those of you who are kind of new to this technology. And then we'll expand on what is Bitcoin and why it matters. And then we'll touch upon what we feel are some kind of the big blockchain business applications that this technology is going to bring about. And then we will talk about what we see are some current signs of mass adoption. And then we will open it up for Q&A. And we're hearing that the sound's off, so I'm going to put in my headset here, and hopefully that's better. We'll give it a shot here. Okay, so a bit about BXE Capital. So we launched in the spring of 2017 the first digital asset investment fund in the state of Colorado. And I would classify us as a kind of multi-strat fundamental long fund. And we tend to focus on kind of these core aspects within the digital economy: infrastructure, store of value, exchanges, decentralized applications, decentralized finance, or what's called DeFi and gaming. And then a kind of a core to our strategy is around producing a passive income each month. So we deploy a lot of strategies for producing income for our investors. So we're kind of like a high growth yield fund, if you will. This is the team, and just kind of point out a couple notables. Josh Rogue is actually the interim CFO of Binance US, which is a popular exchange here in the United States. And then Matt Kaufman is a partner with a law firm up in Wyoming, and actually represented Kraken Exchange, which is a large global digital asset exchange, and he represented them in getting them the first bank license of any exchange in the world. So, we're certainly kind of pioneering and thought leaders in this space. And then, we're backed by a strong group of infrastructure, institutional infrastructure, kind of what we believe are the who's who in vendors in the space. I want to kind of throw this up here. This is the rankings for our fund over the past few years by Barclay Hedge, which tracks the performance of digital asset funds kind of globally. As you can see, kind of we're one of the top ranked funds in this space. And I put this up not to brag, but to really show that we have a really good understanding of this technology and how to deploy capital in this space. So what is a blockchain? So a blockchain is a decentralized distributed digital ledger that lives out on the internet and is supported by thousands, and in Bitcoin's terms, millions of computers kind of around the world. And when we really break down what is the core value proposition for blockchain technology, it really comes down to this. In our view, blockchain technology can be used as a disintermediation tool, right? So we're taking software, math, and cryptography, and we're leveraging that to remove people, trusted third-party intermediaries. Okay, and from our research, we have ascertained that the kind of estimated total addressable market size for trusted third-party intermediaries is around $400 trillion. So if blockchain technology just takes 1% of that total addressable market for trusted third-party intermediaries, we would be looking at a market cap in this space of over $4 trillion. Or 11-fold times larger than it stands roughly today. So a ton of upside, and we're certainly very, very early in the evolution and adoption of this technology. So what is Bitcoin, and why does it matter? So, and I forgive me if I'm reiterating what some of you already know, but I want to go back and give you a little history lesson. So an individual or a group of people by the name of Satoshi Nakamoto in 2009 came out with the Bitcoin white paper. And in it, they described what is a blockchain. They kind of created this technology. And they came out with and launched the Bitcoin network. Okay. And initially, it was set up to be kind of a peer-to-peer cashless payment network. So think of it as a way to move value around the world, quickly, without trusted third-party intermediaries, right? And cheaply. And in the second use case that now Bitcoin is kind of morphing into is as a new global store of value. So think of like a digital gold, right? A digitally scarce commodity that holds its value. That's kind of the second use case for Bitcoin. But let's talk about the first one, right? As Bitcoin is a peer-to-peer cashless payment network. And let me give you an example on this slide. So if you were to send an international wire, right, in dollars, it would take approximately a day or two to process that wire, and you'd be paying a fee of around $50. Now, conversely, if you were to send Bitcoin, right, around the world. The processing time would be under an hour. It's actually closer to about 10 minutes. And you'd be typically paying a transaction fee of under $1. So a completely different way to send value around the world efficiently, cheaply, without intermediaries, with no friction. Now, when you look at another example, you look at the traditional kind of domestic card rails, Visa, Mastercard, in relation to some digital assets that you can use to send value. As you can see, Visa and Mastercard, they charge assessment fees and transaction fees. Well, with these digital currencies, in sending them, there's no assessment fee, and there's very little to no transaction fees for them. So again, cheaper methodology, cheaper rails of moving value around the planet. As well, what blockchain technology does is it fills in the last piece of the protocol puzzle. So let me explain that. So the Internet Protocol, TCP/IP, essentially gave us the ability for email, file transmission, web transmission, voice, like VoIP, voice over internet. And now due to blockchain technology, we have the ability for MOIP, money over internet. We have the ability to send value through the internet as simply as we send an email, right? Paradigm shift. So it's huge. And most people don't really understand this yet, right? It's kind of, I equate us right now, we're in call it the mid-90s for the internet economy, where we were then for the evolution and understanding and adoption of digital assets, right? We're kind of in the still very early beginnings of this. And then when you look at cryptocurrencies, i.e. Bitcoin in relation to the dollar and gold, and you look at the traits of money, as we can see, it's just a better form of money, right? And it's our base case that this technology is going to help to bring kind of money as we know it into complete digital form. But again, we're in the early days of that. So let's talk about the second use case for Bitcoin as a store of value, right? So Bitcoin, and I'm going to give you kind of a real quick overview on Bitcoin. It's a lot to unpack in an hour, but Bitcoin is structured to where it has a fixed supply of 21 million Bitcoin, right? So only 21 million Bitcoin can ever be issued. And right now there are about 18.5 million Bitcoin in existence. And approximately every 10 minutes, miners, which are mining for new Bitcoin via solving a mathematical algorithm, are producing new Bitcoin into the economy, right, into the world, at a rate of about 6.25 Bitcoin every 10 minutes, okay? Now, every 4 years, that issuance rate is cut in half, right? It's structured to go down. So the issuance rate of Bitcoin, new Bitcoins being produced, goes down every 4 years, becomes more and more scarce. Conversely, right, central bank currencies, you can print an unlimited amount of them, right? And we're seeing evidence of that, especially now, given the current macro environment and this global pandemic, where all these central banks are now kind of printing vast amounts of money to stimulate their respective economies. And what this does over time is it debases the value of currencies. So this slide, so the US dollar has basically gone down in purchasing power since the inception of the Fed in 1913, about 95%. So the dollar's purchasing power has been debased and reduced over 95% since 1913 because of this just rapid printing of money. Well, Bitcoin is structured just the opposite, right? And as this chart shows, the price of Bitcoin in 11 years has gone up dramatically as a result. And these vertical green lines are each of the halvenings. And again, the halvening is, as I'd mentioned earlier, is when the issuance rate of new Bitcoin is cut in half. And so we've had three halvenings thus far. And we just had the third halving happen in May, where the newly issued Bitcoins went from 12.5 Bitcoin being issued every 10 minutes to 6.25. Well, as you can see on this chart, every time a halving has happened, it makes Bitcoin more scarce. And think of just simple supply and demand dynamics. So if demand is constant, supply is cut in half, what does that do to the price? Well, we can see on this chart, it has a really positive effect on the price. And henceforth, Bitcoin continues to kind of methodically go up in value. So for those of you who are not, who don't understand kind of the stock to flow methodology, so stock to flow, this chart depicts, essentially it's a way to price scarce assets, right? So gold stock to flow currently is about 62. So what does that mean? So essentially, if you were to take all the inventory that's above ground, right, in gold, and wipe it off of the face of the earth, right? In today's gold production terms, it would take about 62 years to replace that inventory. So pretty scarce. Well, with Bitcoin's halving that just happened, it's close to on par with gold from a stock to flow standpoint of about 56. Now, 4 years from now, with the fourth halving, right, where the issuance rate is cut in half again, Bitcoin's stock to flow will be almost twice that of gold. So think about that. You have now a digitally scarce commodity that is traded across some 400 exchanges around the world. It's recognized. You have liquidity 24/7. 365, and you have an asset that is going to be twice as scarce as gold. By the way, you can use Bitcoin on your phone and you can pay for a Starbucks through a third-party payment app. You can't do that with gold. So it's a paradigm shift that we're seeing, right? In kind of monetary, what could be a new monetary instrument, right? A new store of value. So let's break that down and unpack that from the standpoint of the global macro environment that we're currently in. So as we can see from this chart, this is all of the large central banks and the amount of central bank expansion that we've seen this year as a result of COVID, right? So all these central banks are printing more of their money and they're injecting that liquidity into the markets and via UBI to help people individually, right? And it's interesting when you look at the current environment that we're in, which is marked by very low interest rates, pegging close to zero, rapidly expanding monetary base, and a very, very high debt to GDP. It's estimated by the end of the year that we will have in the United States debt to GDP and upwards of close to 150%. Now you look back historically, and when did we see a similar period, right, with the same kind of dynamics? And we go all the way back to 1940s. In the 1940s, that period was marked by similar scenario, right? Very low interest rates, rapidly expanding monetary base, high debt to GDP, as a result of kind of, World War II. But during that decade, during that 1940s, we saw a massive amount of inflation. Right? There were years within the 1940s where the inflation rate got over 10%. So it's our kind of base case that we're moving into a very similar scenario, right? Due to kind of the basic composition of the global macro environment. On this chart and on this slide, you can see on the left side, these are all kind of the special powers that the Federal Reserve Act has, where the Fed can essentially come in and stimulate the economy by buying up non-government backed assets, mortgage-backed securities, junk bonds, right, to stimulate the economy. And given that we feel we're kind of at the tail end of this long-term debt cycle, given high debt to GDP, given interest rates are pegged close to zero, it's really our base case that central banks don't have a choice but to keep printing at this point. Now, what will that additional printing do? right? So the additional trillions of dollars kind of sloshing around financial markets will help those markets push up to probably reach new all-time highs, right? We'll see the wealth gap grow here. And then we'll see debasement of central bank currencies, i.e. what we believe will be stagflation, which is a period of rising inflation, stagnant growth, and high unemployment. Now, what assets do you want to invest in and hold during periods of stagflation? You want to invest in assets that act as a good inflationary hedge, that are scarce, i.e. gold and Bitcoin, right? So we're in a super ripe environment for the emergence of Bitcoin to come on the global kind of scene as a new inflationary hedge, right? It's interesting because recently we started to see a lot of public companies share that sentiment. And this is a list of publicly held companies that now have deployed some of their treasury into Bitcoin as an inflationary hedge. More recently, Microstrategy and Square. So Microstrategy is a large NASDAQ software company. They took of their $500 million sitting in cash in their treasury, and they bought $425 million in Bitcoin as an inflationary hedge. Square just recently bought 50 million. So it's our base case that you're just going to see this continue to happen more and more and more, which only reinforces the narrative for Bitcoin being this new kind of store of value globally. So blockchain business applications, what are some popular other business applications for blockchain tech? This slide shows kind of what we know are very big popular companies innovating in and around blockchain tech, right? In all different types of markets, asset management, payments, supply chain financing, real estate, syndicated loans, etc. Right? So just this technology has such broad spanning practical applications, much like the internet, right? So one of the kind of what we think are the strong kind of use cases for blockchain tech is around smart contracts. And smart contracts are essentially programmatically software built contracts that auto execute via external data feeds. So, instead of going to an attorney to draft up a contract, right, and relying on people to execute that contract when certain things happen, we can programmatically design software to create these smart contracts that auto-execute when certain things externally happen and data feeds move into source that smart contract. So major opportunity there with smart contracts. So this slide discusses kind of the change in the value capture of how the internet is structured. So on the left side of the slide, you can see this is how today's internet is structured. So you have a thin protocol layer, TCP/IP protocol, that all of these massive kind of applications are built on top of, right? The Facebooks, the Amazons, the Googles of the world. And all the value capture is at the application layer, right? There's no value in that underlying protocol layer. Well, in tomorrow's internet, that's blockchain, it's flipped. It's just the reverse, where you have these smart contract protocol layers like Bitcoin and Ethereum, where all these decentralized applications are built on top of them. Now, the only difference is now you can actually own a piece of that underlying protocol layer, okay? And as more and more applications are built on top of that and accrue value, theoretically, the underlying protocol value should accrue value as well. Paradigm shift. So tomorrow's internet that's blockchain based, you can now invest and hold a piece of the underlying protocol that millions of applications are going to be built on top of. Pretty incredible. So, a lot of you might have heard of kind of Internet 3.0. right, which blockchain technology will bring about, or a decentralized, trustless internet, right? Because you're now removing these trusted third-party intermediaries and you're replacing them with software math and cryptography. And the internet kind of 3.0, the next iteration of the internet, will change all different types of industries. Digital identification, custody solutions, software applications, one of which actually will be asset management, which I think relates to many of us. And it's really this technology is really going to change asset management, we think, the most, and money the most. And let me explain kind of why. So last year, equities traded a little over 1,600 hours last year. Well, digital assets traded last year over 8,700 hours last year. Because digital assets trade across some 400 different digital exchanges that are spread out all over the world, and they trade on these exchanges 24 hours a day, 7 days a week, 365 days a year. So think about that. If you're the New York Stock Exchange and you can boost the number of hours that you trade from 1,600 to over 8,700 hours, you think they're going to do that? They will. The other thing is, so the New York Stock Exchange is basically relegated to a liquidity pool in the United States, investors in the United States. Well, digital assets, because they're traded across some 400 exchanges around the world, you have a global liquidity pool of investors, right? Much larger. So for these reasons, it's our belief that every currency, every stock, every bond, every derivative, every commodity is going to become digitized and trade on digital exchanges for these reasons. So you're in the early beginnings of this kind of paradigm shift for asset management that we're all taking advantage of right now, right? And this is coming. So current signs of mass adoption. So from our research, what we've seen is millennials are the largest kind of demographic holders of digital assets. No surprise. They grew up with the internet. They're native to digital, right? They aren't buying gold. They're buying digital assets on third-party apps like eToro or Robinhood, right? Where you can trade digital assets for free. Millennials by 2029 are going to be the largest demographic, the largest wage earners, and largest demographic of about 2.5 billion people. And it's our base case will drive adoption of digital assets over the next couple of decades and act as a tailwind. And it's our base case that as a result, digital assets are more than likely going to be the best performing asset class over the course of the next couple of decades. So some other signs of kind of institutional adoption. These slides come from Grayscale, from their more recent Q3 kind of investment report. And Grayscale is the largest institutional asset manager. As an institution, you can buy into the Grayscale trust offering. They have a Bitcoin trust, an Ethereum trust, etc. And as you can see, the institutional growth of those investors having exposure to this asset class continues to grow out each quarter, right? And as you can see, cumulative inflows just continue to dramatically increase quarter over quarter. This chart depicts the growth of institutional loan originations with Genesis Capital. Genesis Capital is the largest borrower and lender of digital assets in the world. And as you can see, the quarterly growth in their originations just continues to grow and grow. Silvergate Bank is the largest bank that services crypto companies here domestically. As you can see, the institutional involvement at that bank continues to grow out quarter over quarter. Visa and Mastercard recently rolled out onboarding platforms, programs for companies that want to accept digital assets. And then some really notable investors. Andreessen Horowitz has launched 2 large crypto funds within the past few years. Billionaire hedge fund investor Paul Tudor Jones came out with a letter this spring. In it, he explained why they now have exposure to Bitcoin. And then Jack Dorsey, CEO of Twitter and Square, if you look on his Twitter page, the only thing we're going to see is Bitcoin on it. Now, admittedly, it might have something to do with this slide. This is the Square's Bitcoin revenue by quarter. So Square has a cash app where you can buy and sell Bitcoin for retail investors. As you can see, the Bitcoin revenue growth has dramatically increased last quarter. So, evidence of more and more kind of retail adoption of this asset. And then this slide depicts kind of all the central banks which are currently building out central bank digital currencies. And in fact, I think it's this week or next, we are going to see, I think it's the Bahamas or might be Bermuda, they're coming out with a central bank digital currency, and then China is actually testing their central bank digital currency in a couple of different cities right now, and they're projected to roll that out to the public within the next few months. The Office of Comptroller here in the United States, the OCC, came out a couple months ago, and actually, this was just amazingly bullish news. They're now allowing any central bank, or pardon me, any federally chartered bank here in the United States to custody crypto assets, right? Huge development in our space. These are some kind of well-known companies now that have launched Bitcoin trading platforms and or custody. You might recognize some of these names: Fidelity, Square, Robinhood, eToro, Ameritrade, Chicago Mercantile Exchange, ICE, right, Intercontinental Exchange, which is the largest exchange owner in the world and owns the New York Stock Exchange. They launched last year a digital exchange called Bakkt. So, and it's just our base case that we're going to see more and more adoption of digital assets. Now, one of the reasons why is this chart right here. So this chart depicts all the different asset classes an institutional investor can invest in. And as you can see, Bitcoin has been the best performing asset 8 out of the past 10 years when you compare with all the other tradable, investable asset classes out there. So truly remarkable within a span of kind of, a decade. Now, as well, this came from Fidelity's digital asset report, which was just actually came out, I think, earlier this week. And what they did is they did kind of a simulated portfolio from January 15th or January 2015 through September of 20. And they took kind of what would be a typical 60-40 kind of stock bond portfolio, and they added 1%, 2%, and 3% Bitcoin to it. And as you could see, it produced better performance, right? Better returns. One, because Bitcoin has been the best performing asset the past, 8 out of the past 10 years. But 2, there's no correlation. There's very little correlation that Bitcoin has right now to other asset classes, right? Bonds, REITs, equities, gold, as can be evidenced here. So if you're constructing an investment portfolio, what do you want? You want to invest across non-correlated asset classes. Well, digital assets are not that new asset class that has no correlation because very few people are in it. Okay, so it's a really great addition to an investment portfolio. And Chamath Palihapitiya, who's the CEO of Social Capital, kind of infamous, or famous investor, he kind of put it succinctly in that the traditional kind of 60-40, 60% equity, 40% bond portfolio is dying because bonds are not returning really anything in this low interest rate environment or negative rate environment. So that 60-40 portfolio construction, might have worked in the 80s, 90s, and the 2000s, early 2000s. It's not working now. So it's our base case that as a result, more and more investors are going to be seeking out alternative assets, right? Especially those assets with very little correlation, right, to traditional asset classes with high Sharpe ratios. And, oh, by the way, Bitcoin has performed, the best performing asset class 8 out of the past 10 years. So, it's our base case that you're really going to see asset management change over the course of the next decade as a result of this new asset class emerging. So that kind of opens it up to Q&A for us. So let's see. So what are the risks to the adoption of cryptocurrencies, crypto assets? Very good question. And there's still risk, and I want to be, I want to be clear about that. I mean, we're in the very early days of the emergence of a new asset class, and and the infrastructure is still being built out to support that. And the regulatory environment is still being built out to understand and to properly regulate this new asset class. So we're in the early days of that, right? I equate it to kind of the mid-90s for the internet economy is where I believe we're currently at for the digital economy. So investing in this space, still comes with some risk, some regulatory risk, some custody, security risk out there. But, I've been investing in this space since 2014, and it has gotten exponentially better and safer. And now you have institutional-based investment products that are rolling out from, Fidelity. So Fidelity, they can custody, you can trade these assets. I mean, Fidelity manages about $4 trillion of assets. So now, these big, well-known groups are moving into supporting this asset class. So it's just getting better, by the day. So, all right, let's see. So in 2009, the monetary policy was very accommodative, but we did not see inflation rates grow as we expected. In the last bull market, what makes you think inflation rates increase this time? So, this is theoretical, but again, what we do and what many other investors are doing, kind of like Ray Dalio, right? And you look back at historically when we've been in similar times. And one of my charts, I explained how, right, today we're in a period, a kind of a global macro period of high debt to GDP, rates pegged to near zero, and rapid monetary expansion. And if you go back and you look at the 40s, we had a very similar period. Now in the 40s, again, they were marked by periods of high inflation. And so it's our base case that we will see a movement globally into more of an inflationary environment that's really sparked by two things in our view. One, you have a global pandemic, right, which has shut down a lot of businesses. It's put a lot of people out of work. And so central banks have to take more extraordinary monetary efforts in order to stimulate the economy and support their people, right? So they're debasing their currency, now not to the tune of billions, but trillions of dollars, which should theoretically be more inflationary. And then the second is, if you believe in Ray Dalio's kind of long-term debt cycle, right, that we're in the tail end of this long-term debt cycle, and we have a lot of evidence for that, because rates are pegged down near zero, and the traditional kind of monetary policies that have worked to stimulate the economy are ceasing to work as effectively. And so what central banks are forced to do is, print more and more stimulus. And now, again, not in terms of billions of dollars, but in trillions of dollars, right? So it should theoretically accelerate the debasement of central bank currencies. So let's see. So if you have to buy one stock which correlates to blockchain Bitcoin, what will it be? This is funny. Microstrategy, literally. So Microstrategy, that publicly held NASDAQ company that I talked about, which now owns $425 million worth of Bitcoin. Well, by owning that stock, you now have exposure to that asset. So I think that, other companies are starting to clue into this. And think about it, pension funds, right, that hold that stock now have indirect exposure to Bitcoin. Pretty incredible. So let's see, in your opinion, how long do you think will pass before Bitcoin would scale up as a global currency? That's a really good question, and that's a really hard question to answer. We track trends, we track adoption rates, but Bitcoin is still, call it somewhere around a $200 billion market cap, which is just very small. But Bitcoin goes through these periods of kind of hyper growth, which we saw in 17, we saw in 13, and we think is really coming soon to where, that asset could accrue a lot of value in a short period of time. And then, this is my theory, and these are just my theories, kind of reflexivity kicks in. So if Bitcoin, price appreciation happens dramatically, people start to FOMO into that asset class. Companies start to hold more of it in its treasury. And then as a result, it pushes the price of Bitcoin up. So it's a self-fulfilling prophecy. And we have something called reflexivity, which kicks in, which I believe in. So that could bring about the emergence of Bitcoin as kind of a global currency, a potential global currency, sooner rather than later. But no one knows within what span of time. Now, another theory I have is I really think we could see if Bitcoin continues on its current trajectory, right, of adoption, of price discovery, Bitcoin could be a new monetary instrument like gold. Think about it, right? So you have even more digitally scarce commodity than gold, which you can now hold in your wallet. I could load $1 billion on my cell phone and a wallet, and I could travel anywhere in the country, and I could basically set up shop, right? You can't do that with $1 billion worth of gold. So we could see the emergence of a new central bank monetary instrument, come out in the world, and this could be the early stages of that, So now no one knows for sure, but that's the trajectory I believe we're on, and a lot of my counterparts out there for Bitcoin, right? To be eventually maybe a new central bank monetary instrument. So what's causing the volatility of Bitcoin? That's a good question. Okay, so a couple of things. One, it's a very small asset class, right? I mean, it's around $200 billion. So, but it's a globally traded asset. So, until more liquidity is trading within that asset, I think you're going to continue to see this volatility. As well, on all crypto, there is a layer of margin on all liquidity. And it's a result of many of these exchanges offer 50, 100x leverage for trading these assets, which is just insane to me, but they're doing it because there's a lot of revenue to it. So that amount of leverage, right, creates a hyper volatile asset class. And you just have to understand that. And, you know, it's our base case that you have to be more kind of mid to long-term investors in this because of that volatility. But as institutions move into this space, right, that volatility will become dampened, right, become marginalized. And you should theoretically see less and less volatility from Bitcoin as it just grows and grows and grows. I mean, gold has a market cap of about $9 trillion, right? So you have very small movements in volatility in gold because it has so much liquidity. It's so large. Well, Bitcoin's $200 billion. I mean, it's a fraction of that. But as more and more adoption happens, more liquidity, more institutional investors move into support that asset, and it starts to have a market cap of 1 trillion, 2 trillion, 3 trillion, you know, as well, so should the dampened volatility around it. So how do you analyze prior to investing? You know, I could speak for days about that. You know, it's so, and again, this is just my own theory on this. So you talk to a dozen PMs, they'll give you their different viewpoint. This is mine. I really look at these digital assets as digital networks, right? And you can use these digital networks to do different things. Bitcoin's digital network is you can move value around the world efficiently, and it's a good, you know, potentially a good store of value, right? Like a digitally scarce commodity, right? Digital gold 2.0. Well, if you look at Metcalfe's law on networks, Metcalfe's law states that you value a network by taking the sum of its participants squared. So look at the user base of these assets, right? Look at how many people are joining these networks, are owning a portion of that network. And there's a ton of information out there publicly about the number of wallets being used for different cryptocurrencies, the transactional volume, the hash power behind the Bitcoin network, which is the computing power behind that network. So there's a lot of validity, you know, that we have for which of these networks is going through growth and is being adopted globally. And we focus in on that, right? Because it's, you know, Facebook is a network. Amazon is a network, right? These are different types of networks. Now you have digitally traded networks like Bitcoin, Ethereum, or whatever that you can invest in. And as the user base grows, you know, so should theoretically price discovery. So let's see, how is acceptance of your fund and the asset class in general by institutional investors, insurance companies, et cetera? You know, it's still, yeah, and then what will need to happen to make it more mainstream asset class? You know, we're still early days. You know, we're still, I think, early days in the infrastructure being built out to support this, in the asset management, you know, infrastructure being built out to support it and trade it. There's still a lot of regulatory hurdles to work through, but they're being worked through, and this infrastructure is being built out as we speak, quickly, right? And you know, and so there are only a few different ways that institutions at this point can have exposure, one of which is right through my fund. But that's going to change, right? We still don't have a Bitcoin ETF. Well, when we do, that will really, I think, be a seminal moment in time and will help to legitimize this asset class. I think central banks rolling out central bank digital currencies will help with adoption of this asset class, because think about it, you know, millions, if not billions of people will onboard into the digital economy. By basically holding central bank digital currencies into their digital wallet. They will adopt the tools necessary to hold and invest in these digital assets. So, you know, we look at the emergence of central bank digital currencies as really bullish for the adoption and acceptance of digital assets. So how much of the value of Bitcoin is from limited supply, and how much is from intrinsic value of Bitcoin, if any? That's a really good question. I mean, Bitcoin, I think right now operates, in simple kind of economic terms, supply and demand. As more and more people feel it holds value, whether it be as a global store of value or to move money around the world efficiently, more users flock to it, and henceforth the price goes up. It's my guess, my base case, that over time, though, applications, a lot of applications are going to be built on top of the Bitcoin network. And so it'll derive value, from other aspects, right? But right now, it's really, I think, a speculative investment for a lot of people. But you could see that speculative investment kind of morph into what could eventually be a new monetary instrument, or it could be a protocol layer for people to build applications on top of. So let's see, I know Bitcoin will have a finite supply, but how does the creation of new different coins impact the price value of Bitcoin? So, there are now, many of you probably don't know this, there are like over 5,000 different assets traded around the world, different digital assets, and Bitcoin was the first. And Bitcoin has kind of carved out this niche, right? The kind of store of value niche. And these some 5,000 different tradable digital assets, they're going after carving out different niches as well. Ethereum is carving out a smart contract platform kind of niche. Binance token is the native token for the Binance exchange, right? It's a utility token. So realize that, like, most of these other digital currencies, they aren't structured and set up to go after the same niche that Bitcoin is as the store of value, right? They're going after different verticals. Albeit there have been a lot of copycats, right? There have been, Bitcoin Cash, and there have been all these iterations and they're chasing after, what is Bitcoin. And I don't think they'll be able to ever catch Bitcoin at this point, because Bitcoin has first mover advantage, has a massive, computing hashing base behind it, and has the most liquidity. Bitcoin has over 60% of the market share of the total asset class is Bitcoin. And so I think, you have kind of the Facebook moment, right? Where it just becomes such a large, well-known network that everybody just continues to flock to it. And it just is this self-fulfilling prophecy. So, it's our base case. Now, is Bitcoin the MySpace of, I don't know. I mean, time will tell, but I think it's unlikely. I think it's more, the Facebook of digital assets. And then looks like we've got time for one last question. What limitations does Bitcoin have for more widespread use in routine transactions? So a couple. So Bitcoin is structured right now where you can only settle like 3, 4, 5 transactions every second. And it's a problem. It's with the block kind of you can only have a certain amount of transactions in every block, and a block is basically roughly a 10-minute window of time, and that's kind of a scaling issue, right? For using Bitcoin, on everyday occurrence, because the number of transactions that can process on that network is relatively slow. Now that could be more of kind of a value prop though. Gold is, right? Transactions, moving gold around is slow. So I actually think that's one of kind of the inherent fundamental kind of construction points that are valid for Bitcoin eventually becoming kind of a new monetary instrument. So one is scalability, right? And that that kind of ceiling, if you will, albeit they're working on layer 2 scaling solutions where you can have kind of a thin layer on top of Bitcoin that can process transactions much faster, thousands of transactions a second. Lightning Network is one of those. The other thing is right now people are not using Bitcoin to buy things with because they're speculating. They're speculating on the price appreciation of Bitcoin over the next decade being, exponential. And so, candidly, nobody in their right mind is going to use Bitcoin to buy Starbucks, right? They're investing in it. They're holding those Bitcoin because they see that it's becoming more and more scarce. And they feel like the price discovery, eventually, Bitcoin could be on par with gold's market cap of 9 trillion. Well, right now, Bitcoin has a total market cap of around 200 billion. So that, so right now, especially in kind of first world countries, most people holding Bitcoin are not transacting day to day with it, right? They're speculating on it. They're holding it as an investment. And then I guess we've got one more question. So how is Bitcoin moving to actual usage beyond investing? And as I mentioned, a lot of the usage is people are building applications on top of that protocol layer. And those applications like the Lightning Network are starting to be used more. So I think as layer 2 scaling solutions come out on top of Bitcoin and you can process transactions, much easier, they're probably going to drive actual usage. And it probably won't be in first world countries, right? Like the United States or China. It'll probably be more second and third world countries. And people, candidly, trying to preserve their wealth. Think of Venezuela and the hyperinflation that's going on there. And people's wealth is just being decimated. Well, now you can invest in and hold this digital asset and preserve your family's wealth, right? So there are one of 100 different narratives out there. For kind of more Bitcoin usage. And I think that wraps it up. Steve, if you want to kind of chime in.
Yeah, thanks, Josh. I on behalf of everybody that was part of the call today, thank you for taking the time to talk to us about this. And thanks for all of you who sent in questions. I found it very enlightening and interesting. While Josh was speaking, I was poking around online and found that you can follow BXE Capital on Facebook, Twitter, etc. So I noticed various articles there that sounded interesting, and I opened them up, and I'll be reading them shortly. So if you're interested in the asset class, go give them a follow. And one last administrative note. This presentation was recorded, and Josh said in the chat that all participants can get a copy of the slide deck, which we appreciate. So stay tuned for that. So that's all for today. Thanks, everyone. Have a great rest of your day, and we will see you all next month, and maybe someday we'll even see you in person. That's what we're hoping for. So
thanks, Stephen.
Take care, everyone.
All right, bye-bye.